What's happening, folks? It's Rod with Power Group. Welcome back on The Pursuit of Wealth. It is Wednesday, August 17th. Hope you're well today. Going to get started with today's live stream. I see we have some people joining us, so welcome. If you could smash the like, help support me in the channel. Let us know where you're tuning in from and tick the bell. You'll be notified on any future videos. If you're new, you can subscribe and share the video with anybody that might find value. Going to make today's live stream public. Usually make these, like I said, private for private Power Group members. And we do it Monday to Friday and usually about 30 minutes before the market close. And going to get started with the live stream and ticker requests. We'll do a quick market update. And if anybody does have any ticker requests, make sure to place them inside of the live chat. And let's go. Hope everyone's having a great day so far. It's a pretty wild day in the markets today. I mentioned yesterday that because QQQ, the tech sector, and Bitcoin were starting daily consolidation, that could result in daily consolidation on SPY. And that's exactly what happened. So once again, Bitcoin and QQQ have been the leading indicators and giving us these warning signs. And like I said, usually giving us the early move before we can expect it in the broader market and in other sectors as well. But as we know, Bitcoin, crypto, and tech stocks have been leading the bull market really since March of 2020. And I expect that to be the case until things change, right? Taking a look at the Bitcoin chart, though, I was expecting a pullback to EMA 26, and we actually lost it today. So that is bearish, and we have next support to be watching at 22,666. That'll be the key support going forward, as if we lose that, we lose, in my opinion, the daily uptrend. If we zoom out to the weekly time frame, we know that we're due for weekly consolidation. We haven't consolidated now on the weekly time frame in 5 weeks. So it's all about the most important support for Bitcoin for me is 22,666. If we lose that, we start weekly consolidation and we look for a higher low compared to 18,603. Really, it was their last higher low. And then the low of the pullback there at 17,567. Taking a look at some of our movers and shakers today, we have CODE, HUT, and Mara. So blockchain names getting absolutely destroyed today. BTC shorts up 23, almost 24% currently. CEL and EOS. EOS had a nice move off of the lows there. We hit a low of 81 cents. So from those lows in just a little over a month, up about 100%. So nice trade there on EOS. It's another name that I'm pretty bullish on. I'm not a huge fan of the project, but I am bullish on it long term. I do think that it's going to be one of the ones with staying power. That's for sure. We'll get into the chat as well here in a moment. Like I said, we'll go through the market update and we'll go over some of my thoughts and opinions on the market. And if anybody has any tick requests, make sure to place them inside of the live chat. But taking a look at SPY. So SPY started daily consolidation. Like I said, 426.88 was key support. Once we lost that, we lost the low of yesterday, meaning we started the daily consolidation. When we're pulling back and consolidating, it just means we're losing the low of the previous candle. So whatever time frame we're on, you can see here, this is the daily time frame. We lost that low, therefore daily consolidation and the pullback began. Now we can potentially expect a pullback to around EMA 12 there at 419.38, but it is a potential daily bull flag. And as long as 422.80 holds, it's still a potential bull flag. We get as low as 424.54, and the bull flag will be targeting 447. We need to break resistance at 431.73 in order to confirm this bull flag. And like I said, we'll be targeting 447. And on the price action, we don't have any resistance until 448. So that lines up well with the price action as well. But we are coming off daily overbought territory on the RSI. And we even got a bit of a trend line here that we can be watching as well. So if we break this trend line, that will be cause for concern. And like I said, more than likely going to see weekly consolidation, just like Bitcoin. We haven't seen weekly consolidation on the S&P 500 since the third week of July. So we're now going on again 5 weeks. So very correlated to the crypto space. It's been 5 weeks on both crypto and the S&P 500 since we started weekly consolidation. So we will expect it. It is imminent. It's going to happen at some point soon, but we know that right now we're retracing about 50% of this dump from the all-time high to the low. We could still see an EMA 12 and 26 bull cross on the weekly EMAs, but again, more than likely going to need to come down and back test those EMAs, form support. It would just be healthy. So don't be surprised if we pull back to the 412, maybe even a flush of 410 for a weekly higher low. And that would just be 100% healthy in my opinion. Taking a look at the dollar as well. The dollar is a potential weekly downtrend on watch. So I've been looking at this chart saying that we could potentially see a head and shoulders, but I said that was probably not the most likely scenario, in my opinion. I was looking at a potential weekly downtrend. So if we just came straight down from here, it could have been a potential head and shoulders. But now we're starting to bounce here on the weekly time frame. You can see here we broke the high of the previous weekly candle. Therefore, I said this last week, that based on how much we pulled back already and how much we would need to pull back to make a head and shoulders to form this head and then a potential right shoulder, I didn't think that was going to be the most likely scenario. And we are losing EMA 12 here, which is the first time really since back here in February. So that is a bit bearish as well, but good for stocks, right? Good for crypto, good for stocks. We want to see the dollar break down based on how strong it's been. But we do have this hidden bearish RSI divergence with the lower highs and lower lows on the RSI and higher lows and higher highs on the price action. And like I said, dip below EMA 12, we're holding it. But like I said, the fact that we dip below it, I think that the most likely scenario is we're not going to have a head and shoulders anymore. I think that that is possible, but not the most likely scenario, like I've been mentioning for a couple of weeks now. What I think will happen, we confirmed the daily bear flag and we targeted 104. We hit that. So that was right on the money. But what I think is going to happen now is we're going to see this high, low, lower high, and then a lower low. We'll come back down here and back test this green dotted line, which is previous support. And we also have support there at 101 on the previous weekly higher low. And coming off weekly RSI was almost, it was at 80. So I thought it was almost at 80, but it was over 80. It was at 81. So I think the most likely scenario is that we see the dollar bounce here, which we are on the weekly time frame. Bouncing just means we're breaking the high of the previous candle, and then a lower high and a lower low would give us weekly consolidation and a weekly downtrend, and then potential for monthly consolidation. And we got about 14 days left in this monthly candle. It's entirely possible that it happens this month, but I think that the most likely scenario is we tighten up. It's the summer, drop off in activity, that type of thing. I think that we could see maybe just tighten up and kind of range bound this month into the end of this month into September, and then into September into the midterms and into the elections into the fall. We see monthly consolidation potentially next month, and we could easily pull back to EMA 12 here, and it would be healthy as well. We're still in a monthly uptrend, but wouldn't be surprised if we back tested 100 here and back tested the monthly EMA 12 if we do confirm a weekly downtrend. So right now, the dollar is probably the most important chart that I'm looking at, and the weekly time frame here now with a potential for a weekly lower high and lower low and a confirmed weekly downtrend. That'd be the first time we were in a weekly downtrend since back here in December. So that would be notable. Precious metals have been weak, but we are setting up for a potential weekly trend change here on silver and also on gold. Gold could also be a potential bull flag. Yep, perfect hold of the 0.32. So if we do confirm this bull flag, we'll look for a move up to around the 1890 area. And in order to confirm it now, we need to break 1807 resistance. So watch for precious metals to potentially play catch up here as a laggard play because they have been pretty weak comparative to the rest of the market. Moving on, taking a look at Tesla. So Tesla started daily consolidation. So this has been the trend since March 2020, right? We see crypto move, we see Tesla move, and then we see the S&P 500 move, usually crypto and tech because they're very correlated to the NASDAQ, to the tech sector, and crypto as well, being technology, right? And new emerging technology, very, very correlated to the tech sector. And then we see Tesla move because Tesla had so much Bitcoin on its balance sheet and over $2 billion at one point. They sold a bunch. So now it hasn't been correlating nearly as much, but it's still correlating. And case in point, today, Bitcoin started daily consolidation the last few days, and then QQQ was another clue. So we had daily consolidation yesterday on the S&P on Bitcoin. Then QQQ yesterday lost the low by, not by much, by a few pennies, but still giving us that heads up that we could see that spill over into the S&P 500 and each individual name. And then actually SPY started daily consolidation first before Tesla. So again, I think we're still seeing the correlation, but we're not seeing as high of a correlation because of the fact that Tesla doesn't hold as much Bitcoin on its balance sheet. I think that really has a lot to do with it. Keep in mind that we have the 3-for-1 stock split that'll be occurring a week from tomorrow. So essentially you'll just divide this stock price by 3, right? So 9/11 divided by 3, it'll be a $300 stock this time, tomorrow, a week from tomorrow. And that could potentially send us up one more leg higher, and we do have a weekly bull flag on watch as well. And we could still see an EMA 12 and 26 bull cross with the shorter term exponential moving average crossing up through the longer term. That's called a bull cross, usually insinuating more upside, and we're nowhere near weekly overbought. So what I think is going to happen is we could see this weekly bull flag confirm. In order to negate it, we would have to lose 827. That would decrease the odds that we're going to see another leg up. But in order to confirm it, we need to break resistance at 940.82. Break 940.82, and we're targeting the weekly bull flag of $1,200 on Tesla. And at that point, we would only be about 3%, 4% away from all-time highs. So I think that weekly bull flag has a very high chance and high probability of playing out. Just because of the fact that we could see a pretty big run up into the stock split. We are starting to see some hidden bearish RSI divergence here on the daily time frame, though, with lower highs, and I want to see one more lower low to confirm here. So I want to see the RSI drop below 56 in order to confirm that here. But it is a daily cup and handle as well. You can see here we have the cup, now we have the handle and a potential bull flag, and the cup and handle target breakout is targeting 1,070. So we could see a move up to around 1,070, come down, form a daily higher low, and then see the weekly bull flag confirm, and then target 1,200, and then a potential sell the news event once the actual split occurs into next week. But like I said, we know that SPY and the tech sector is due for weekly consolidation. So it's entirely possible that we need to take a breather first before, and then we see a run after the split. But obviously bulls are in full control right now in the market, and the most important support for me on Tesla is 838. Taking a look at our movers and shakers on the day today, we have Fubo, AMC, JMIA, and on the bull list we have WNRS, Bed Bath & Beyond, and CWeb. Bed Bath & Beyond has been an absolute monster. If you take a look at the last 3 weeks, it's up over 500%. So this is the definition of a short squeeze. We went from weekly oversold to weekly overbought in 3 weeks. That doesn't happen very often. And if we take a look at the monthly time frame, look at that monthly candle. That is massive. From the lows there to the high, up almost 600%. So this is pretty incredible what we're seeing here. You know, we're starting, a lot of people thought it was a suckers rally. It was going to be nothing but a dead cat bounce. And, you know, it was basically baked into the cards that we were going lower, entering a recession. We're going to enter a massive bear market. I know Michael Burry, the big short guy, he sold like 98% of his stocks in his portfolio. So he's betting that we're going to go down. But personally, I'm of the thinking that the bottom could be in for now. And this is the time where people end up getting wrecked, right? Is they say, okay, well, the market totally isn't going to pull back, and it's doing exactly the opposite of what I expected. I didn't think that I thought it was a suckers rally. It was the most hated rally, you know, in equities in a long time. And now people are starting to get FOMO, right? And if you take a look at SPY, off the lows there. We were just at 362, and on the S&P 500, we're now up almost 20%, right? So the fact that we're up that much, people start to say, okay, well, now I'm starting to FOMO in. And when we start to retrace, if I just go to SPX chart, because I have a bunch of lines on the other one. But if you take a look here, we've now retraced about over 50%. So we're approaching the 0.618 fib retracement level. So anything under the 0.5 is 50%, right? So we essentially retraced 50% of this dump, and now we're getting back into the territory where, you know, we're starting to think that this is more than just a suckers rally. This could actually have some legs behind it, but this is also the time where people get wrecked and they FOMO in. We're still in a monthly downtrend with lower highs and lower lows, first time since 2008 financial crisis. And, you know, you have to wonder, is this where market makers are going to trap retail and absolutely wreck them? We could still see an EMA 12 and 26 bear cross here on the monthly EMAs. This is, again, where people tend to FOMO in, and they make buying and selling decisions based on emotion, not based on logic, or buying near support or selling near resistance. And they FOMO in, you know, they essentially didn't get a chance to enter, right? And now things are getting extended and they're confused, right? And then they end up making buying and selling decisions based off of what they feel, not what, you know, logic is telling them to do or what the charts are saying. And I took this bus fractal from back here in the .com days. This is no stranger. This is no stranger to the show. I've shown this chart multiple times, but look where we had the RSI peak in 1996. And then 4 years later, the price peaked. We had that bearish hidden RSI divergence on the monthly. Then we went from overbought to oversold. And then it took about 4 years for that to happen. look at this now. How long has it been since we peaked here on the RSI? 2018. It's been 4 years, and we could potentially see the same thing. Are we heading down to monthly oversold? Could that happen by October or maybe early next year? Entirely possible. But I took the bus fractal here, this fractal right here from the high to the low, from monthly overbought to oversold, and I placed it here on the .com bubble fractal bust on the everything bubble 2022. This is the closest thing that we have to it. And look how eerily similar it is, right? We have these lower highs and lower lows, confirm monthly downtrend, monthly lower high and lower low, and another potential for a monthly lower high and lower low. So it's all about support there at 362 on the monthly time frame, because if we lose that, we could be targeting down here around the 330s, which would be our previous all-time highs before we broke out on the massive run that we've seen in the last couple of years, right? That was right before C19 and the massive capitulation that we saw. So again, not to be the bearer of bad news, not trying to instill fear or anything like that, but now is a good time to start considering hedge positions. So if you're exposed long to MJ or any high risk assets and volatile sectors like MJ, personally, I have a lot of MJ stocks. I have about 14 now, including ETFs. I have American operators, Canadian operators, retail operators, right? So picks and shovels, and I'm hedging with SPXS. So now's a good time, in my opinion, that you can start to load up and hedge those long positions. Again, not financial advice. Do your own research. This is for entertainment purposes only, but no time like the present to start adding that. Personally, I added SPXS at 430 on SPY. I'll add again if we get to 450, and I'll add again if we get to 470. So I have a couple more entries, and again, if I make profit from that, I'm going to rotate those profits into other sectors like beaten down MJ or beaten down altcoins that would likely result in more downside. C-Web having a good day as well, almost back up to $1. I think I'm up like 50% on my entry on that one. CGC having another really good day. I said watch for a move up to about $5 pretty quickly, and we hit 430 today USD on the NASDAQ. So getting pretty close to $5 Canadian. And CGC, I think I'm up about 60 some percent now on my entry on that one after we confirmed the weekly bear flag. So if we zoom out to the weekly time frame, I was watching for this weekly bear flag on this dump here. We had the weak bounce. Anything under the 0.382 fib, that 438 was a weekly bear flag. Then once we lost 324, we confirmed it. The target was 233 and we hit 213. So I started loading up as we were confirming the weekly bear flag. And then I entered again right around that 52-week low. And then we started the weekly bounce, and we were off to the races ever since. And this is what I'm talking about. What did I say the other day? I said, you're going to see MJ back to back out of nowhere. It's going to, on Monday, things were up 10, 20% for no reason really. And had everybody scrambling. And I said, what you're going to see is back-to-back strings of days, 10, 5, 10, 15, 20%. And that's exactly what we're seeing, right? We're starting to see volatility. I did a video, volatility is back in the MJ sector, and we're starting to see the scales tipping, right? So many people are on one side of the fence, right? Everybody's bearish. There's nobody left to go short or bear, right? So there's nobody left to sell. It's only a matter of time before we start to regain some positive momentum. We also had some Canopy news out today. Canopy Growth to hold virtual annual general and special meeting. I put it in the Power Group private community here earlier today. So that will be on September 15th, 2022 at 1 p.m. Eastern time. So that's something that we can look forward to next week. Also, the Ethereum merge is scheduled for that same day, I think, between the 15th and the 17th. So that could be some volatility leading into that. That could be good for markets if we see a run up into that and then sell the news. May look at wanting to take profits though before we get to, before we go into that merge. And hearing a lot of funds are going to be locked up, and also the risk that it might not go smoothly. So you may want to de-risk a little bit. Again, not telling you to buy, sell, or hold, but just something that you can watch out for. And then taking a look here now, CGC. So we are pulling back, but we're not yet daily overbought here on the daily time frame. We did have the EMA 12 and 26 bull cross, and again, if SPY, the S&P 500, and the broader market is starting to see weakness and weekly consolidation, we could potentially see that translate into weakness into CGC. But what I'm looking for is the pattern of a higher low every candle to break. So we held the low of yesterday at 355. The new low of the day today is 364. So we're probably not going to lose that now with 5 minutes left in the day. So that's the new level going forward into tomorrow. If we lose 364, we start daily consolidation, and we could probably expect about a 7 to 13% pullback, and just look for a healthy higher low and back test those EMAs. But on our bear list, we have Cron, DB, and Fire and Flower. On the bull list, we have PWR, CGC, Oxley. Hexo is doing well today at one point, but coming back down again. But again, a lot of our names are starting the monthly bounces, and we could be due for some massive upside here. And I think we could string together a few solid green months, in my opinion. But again, back to what I was saying, we're going to see 10, 15, 20% gains out of nowhere, and it's just going to leave people in the dust, right? And we're leading into the fall. We're leading into potential safe banking passing. If any of that passes, there's going to be so many people FOMOing in, and they're going to get wrecked. And it's as if, not enough people got wrecked already, but most people don't learn, right? They sell when we're down here, and then they want to buy when we're up here, right? They got the complete opposite psychology of what, the average sound investor does, right? 95% of retail investors lose money, and that's because they let emotions do the talking, right? And the decision making. So if we take a look at the last few days, right? What did I say? We're going to see huge moves out of nowhere, and we're going to see 10, 20, 15% gains. So let's just take a look at this day here. We were up 16%. Then we dropped basically 16%. Then we were up 28%. Then we dropped 10%. Then the next day we're up 17%. So you see the volatility. And then just 2 days ago, we were up 21% from the low of the day. And then here from the low of the day, we were up 10%. Today from the low of the day, we're up 18%. So this is exactly what I'm talking about. They're going to start to trap a lot of retail. A lot of retail are going to get caught like a deer in the headlights, and they're not going to know what to do. They're going to FOMO in. They're going to make buying and selling decisions based off of emotion. And that's just a recipe for disaster, unfortunately. And there's nothing you can do. I can scream from the rooftops. And I'm starting to see people now saying, do you think CGC is going to go back down? And those same people that were saying, oh, do you think we're going to get a chance to add lower? Those same people a couple weeks ago were saying, is the price ever going to stop going down? And you're like, buy more, I guess. If the price is low, that's when I buy, right? But now that prices are high, they're asking, is the price ever going to go back down again, right? So it's funny how the human psyche works. But that's what's so great about charts is all this tells us is emotion, and nothing has changed with regards to human emotion really in ever, right? So this is why charts are so accurate, not always, but it's just probabilities. It gives us odds and gives us an edge. And it's just because we're just charting emotion, right? This is just how people are, either they're bullish or they're bearish, how they're feeling on a particular day. And it's very easy to bring this into, the analysis and factor it into our game plan, right? And most people don't have a game plan. That's part of the problem. On the US side, we had CNVCF, SHWZ, and LOWL on the bear list. On the bull list, we have KHRN, CWEB, and MedMen. MedMen was up. Look at this one. From the low of the day, it was up 42%. And Schwaz, SHWZ, short squeeze, in the last couple of days, it was up 66%. So now MedMen kind of taking its turn. But now from the high of the day to the low of the day, down almost 20%. So again, just healthy. After a 60% move in 2 days, you need to expect a 10 to 20% pullback, right? And this all comes with experience. But MedMen, I've been adding to this position as well. I'm very bullish on this. Tilray has their debt, so their convertible notes, what they can later on convert into equity potentially upon federal legalization. And if that happens, MedMen's going to absolutely skyrocket, in my opinion. And in my opinion, we're going to have Team Tilray, Afria, Hexo, Redican, Zenabis, 48 North, potentially for MedMen. And it's going to be epic, I think. It's going to be the entry into retail into the US and into California, into some really key areas like the Bay Area, etc. But look at the low there from 6.5 cents. If we just go back to the all-time highs on MedMen, like even if you threw $500 or a couple, $250, $500, $1,000 into this thing, that's 150x. That means if you put $1,000 into this thing and it goes back to an all-time high someday, if it's 5 years, 3 years, 2 years, whatever, that's $150,000 for every $1,000 you invest, right? And that's just if we go back to all-time highs, not even thinking if we go to new ones, right? New price discovery. And if that happens, obviously the US would probably have legalized, right? But that could very well happen very soon. If not, safe banking could easily create a massive bounce. I would think at least 200, 300% on a lot of these names. So we'll get into the chat here in a moment. MSOS, pretty weak at the moment. So daily consolidation underway, having lost yesterday's low, actually day number 2. And we're looking for a higher low compared to, we have support here at 1152 and then 1096. But I really don't care about any other time frame other than the weekly time frame. The weekly time frame is what's the most important in my opinion. We have the low, high, higher low, and we have this potential for a weekly uptrend now. So we have our higher low. Now we need to break 1299, confirm the weekly uptrend. That will also confirm the monthly bounce is underway. And it'll be the first time we bounced since November. And I think that we could easily see a move up to around that $19 area, which would mean about a 63% pump from current levels. All right, checking in on Power Group private community, see if there's any news developments. So there's a lot of misconceptions ahead of the Ethereum merge as well. And this article just came out. I'll put this in the chat. That'll be good. A lot of people speculating a lot of different things, and this kind of clears it up. So posting that in there now and into the chat. Just gonna have a drink of water here, and then we'll get into the chat. If anybody has any ticker requests, now would be a good time to put that in the live chat. Also, before we jump into ticker requests and any questions, I did want to highlight that I had a couple people say that maybe it's a good idea if we all email Hexo. I emailed Hexo about a potential interview. Like I said, I had one set up, and I was told by Jennifer Smith that I was very close to getting one, and then she got let go because of the downsizing in the company, and then I had to start all over again from the bottom up. Started from the bottom, now we're here. So now I'm trying to go through, and we know that Hexo hadn't done any interviews for like a year. Funny how they start doing interviews again at the bottom of the bear market when we think we're going to reverse, right? They did that last time too, whenever the prices were going from like $2 to $11 and Tilray went from like $4 to $67. There was conference after conference after conference, interview after interview, after company, and they were just pumping it, mainstream media pumping it. And now in the bear market, there's no interviews, there's no companies, no conference calls or anything like that. So watch for conference calls to start picking up, watch for interviews to start picking up. So now that interviews are starting to pick up, and we just saw I just did a video going over that new CEO video interview with Charlie Bowman. Maybe they might be inclined to open to an interview with Pow, and I'll ask them the hard questions, and I'll be respectful. It's all about how you present the question and your intentions, right? If you're having any kind of malintent, right, then they might just shut you down, not even give you a chance. But obviously, all in how you present yourself. I just did an interview as well with Cannara, the CFO of Cannara Biotech yesterday, Nicholas Sosiak. You can check that one out. That was fantastic. The future looks extremely bright for Cannara and a lot of these, some of these names here in Canada. But that's my most bullish low cap. My biggest holdings right now in Canada for individual stocks goes Hexo, Tilray, and then I think it's Cannara after that. Maybe Oxley's up there too. But I really, really like Cannara. I think they're going to have a very, very bright future ahead of them. But you can check that out. But also, so back to the interview. So I said, hey, friends, I need your help. A community member mentioned that we should all email Hexo asking for a POW interview. And I think that would speak volumes to how strong the Hexo community is. I would appreciate it, as I have already sent one as well. I was told I was getting close to an interview, but then it fell through the cracks. You can email both of the following emails, and I placed them there. And I'll also place them into the chat here now. I would appreciate it. I think we've got already like over a dozen people who emailed. So anybody who has done that, thank you very much. I appreciate it. Anybody tuning in after the fact from the live stream, I would appreciate it as well. But yeah, it's looking good. Hopefully we can get somebody on. And like I said, I'll ask them the tough questions. And maybe they won't. Usually I get a list of questions from the community, and if anybody has any questions as well, you can start sending them my way now. I usually get questions from the community, and then I usually send them, and I concoct my own as well. And then I send them to whoever it is that I'm interviewing, and then they vet them. But to be honest, up to this point, I haven't had anybody decline any of my questions. So just so everybody's aware. But thank you for everybody who is supporting me. And yeah, it doesn't go unnoticed. I really do appreciate it. Hello, hello. Welcome, welcome. What do you think of the ticker symbol UBX? Let's take a look. I assume it's on the NASDAQ. If you can let me know the exchange as well, it helps. Just sometimes it's confusing because you get multiple tickers, but I assume this is the one. I'll keep going unless you tell me otherwise. Also, Cresco had earnings today. I'm going to do another video on this and I'll dive deeper into that one, but they missed in terms of revenue and EPS. And only like 2% sequential growth. So as I've been saying, MSOs are starting to really slow down quarter over quarter. Not so much year over year, but quarter over quarter, we're starting to see some stagnation there. But yeah, taking a look at UBX. So we have quite the upper wick here on the monthly time frame. We're now down from the high of the month. We're down 47%. So this is another one of those names, right, where we're pulling back, we're pulling back, we're pulling back. What is it, an MJ stock? Yeah, peaked in February 2021. It must be. Biotechnology. I've never heard of this one before, but it looks like an MJ chart. So yeah, and then this is November, I bet. Yep. So exactly. I don't even need to. Forgot to share my screen here. I don't even need to look at. I don't even have to know that this is an MJ stock. I just looked at this chart and I said, okay, when did it peak? February 2021. And I said, when did we bounce next? November. Okay, yeah, it's an MJ stock, or it must be. It's got to be. But yeah, here we are starting the monthly bounce, right? So this is what could happen to a lot of our other MJ names as well, right? A lot of names, not just in MJ, but a lot of names are starting their monthly bounces. And if we start a monthly bounce on, if we do something similar like this on, CGC or Tilray or Hexo, like I said, it's up 140% from starting the monthly bounce. And that's what happens after you see, 18 months of pullback essentially with no real monthly bounces, right? So we get extended to the downside. Mark my words, MJ is going to absolutely explode into the fall. If I'm wrong, I'll make the video. But yeah, on the monthly time frame, you could have entered when we broke the high of the previous monthly candle. I would say if you haven't entered now, you're basically, I would just consider it a missed trade. I wouldn't FOMO into this one. Like I said, you could have set a stop buy. So as soon as we broke the high of the previous monthly candle, that means we're starting the monthly bounce. And we hadn't really bounced since November, right? That was the last time. This one, how much did we bounce? Like 6%. Yeah, I wouldn't consider that enough. This one here, we bounced about 23%. So it's been about, since November, almost a year. And then as soon as we broke the high there at 77 cents, you could have set a stop buy. So even 81 cents, even if you entered at 81 cents, stop buy just means that you set a buy order and that if it hits a certain price or higher, you buy it. So even if you set it at 81 cents, why would you set it at 81 cents? Just to allow a little bit of wiggle room in case you get faked out, right? Bull trap. So if you set it at 81 cents to the high there, that would have been 130% gain, right? So again, if you haven't entered now, you're probably best to just sit this one out. You missed it. Call a spade a spade. It's a weekly inside bar, so it's a tightening range. And the range is huge, so it's very risky in either direction, right? We could easily go up from current levels. To break this weekly inside bar, we could go up 70%, right? But we're closer to support now, but another 14% we would need roughly to start weekly consolidation and break that inside bar bearish. So once again, very, very risky. What I would probably do if you're looking for any long-term entries on this one, I'd probably wait for daily oversold. So wait for the RSI to get down here into the 30s. We're currently only at 53. So that's what I would do. If you're looking for a day trade, hourly oversold would have been a good one. Actually, we never even hit it yet. So that could be if you're looking for like a day trade / swing trade, you could look to enter at hourly oversold. I would wait for extreme conditions, maybe wait till we get into the 25 or low 20s and then start to scale in, looking for a potential short-term either day trade or swing trade. But if you're looking for long-term entries, I'd be waiting for at least for daily oversold and a weekly higher low, somewhere around that 70 cents area. But you could start to scale in around 75 cents as well. Use the dollar cost averaging approach. Hopefully that helps. On the weekly time frame, we're starting to see parabolic. We're starting to see the stochastic and the MACD go parabolic, and the price action as well. So it's looking really, really good. In terms of the weekly moving averages, we topped out right at the 50 weekly there at 140. If we can get a candle close, I'd like to see a weekly candle close over 140, maybe even 2 candles based on how bearish we've been over the last 18 months. And then if we do close a couple of weekly candles successfully over 140, watch it move up to around that 324 area. And then the 200 weekly there at 580. See if we can see any confluence here on the daily moving averages. So we had a death cross here on the moving averages back in May of 2021. So if you just exited there when the price was at like $4, you would have saved yourself, what, 80+% of downside just on that death cross alone. And we also would have confirmed a monthly downtrends, right? That was also a huge warning sign, right? If we take a look at the high there of February 2021, we had the lower high and lower low, lower high and lower low. Even if you just exited on this one, which would have been a very convincing monthly lower high and lower lower, went short, that would have been a short opportunity of about 72%. Granted, it dropped a lot lower than a lot of us would have ever thought, right? But on the daily moving averages, we got above the 200-day moving average. And this is what I think a lot of MJ is going to do too. We're going to see a lot of MJ back test their 200-day moving average because we haven't tested it since back here so CGC back in April of 2021. So I think we're going to start to see, we're going to ebb and flow, just like what do we know about moving averages? We usually come back and we respect them. We usually come back and test them. So here we've got extended to the upside. We came back down, got extended to the downside, got back above it, confirmed it as support, lost it, confirmed resistance, extended to the downside. Got above it, extended to the downside, still resistance. Then we got above it here, confirmed support, extended to the upside, came back down, tried to confirm support, lost it, resistance, downside, right? Now we're going to potentially trend back up towards it. And then I think the same thing will happen for UBX. Or sorry, what has happened to UBX will happen to a lot of our other MJ names. So it's looking bearish here now with the price under $1. Obviously $1 psychological, and that 200-day moving average, very, very strong resistance to get above 118. But yeah, I'd be very cautious on any of these names. And this is why, and this is how I know when people start asking me, like I've never heard of this ticker before. And when people start asking me of like a random ticker that I never heard before, I can almost guarantee you before I even brought up the chart that we're up a bunch, right? And then that's my casing point is when people start to get excited and interested is when prices skyrocket, right? They don't want to enter when, we're down here, right? They want to enter when we just ran, most people anyway, want to enter when we're up 100, 200%, right? And then that's when FOMO starts kicking in and then people want to buy it, right? So I try to do the exact opposite of that mentality. And like I said, an easy win would have been to just say, okay, if we break the high of the previous monthly candle, I'll enter a trade based on how beaten down we are, monthly oversold. If not, I won't even look at the chart and, maybe even set an alert. You could have just set an alert. So if we broke the high of the previous monthly candle, if we didn't do it this month, then the next month, you just set the high of you just adjust the alert to the next month, right? And then here you could have, like I said, if you just entered, set an alert, you would have made 140% of upside if you held that whole time. And you don't need to make that whole move, right? As long as you're selling near the top and buying near the bottom and selling near resistance, buying near support. And even if you caught, 50% of that move, that would have been about a 70% gain, right? So you don't need to catch the whole thing in order to make any real, any real gains and whatnot, right? So. Loving all these posts, Rod. Thank you. We'll have to listen to this later, though. Yeah, you bet. No problem at all. My pleasure. Thanks for joining the stream for however long you were on here for. But yeah, I try to come on. I get quite a few questions, people messaging me directly, and it's just easier to come on here and do these live streams. Not everybody can make the live streams at the same time, but again, we do this Monday to Friday for private POW Group members. So every single day, I go live 30 minutes before the market open and 30 minutes before the market close to get my opinions, thoughts on the market. And then if anybody has any questions or tickers that they want reviewed and charted, I do that as well. Rod, I've heard some economists this week say that September is usually not a good month for the stock market. What do you think about that? Yeah, generally September, October, not the greatest, but we've seen a terrible bear market, in MJ. We've seen a brutal bear market in, some of our tech names, Bitcoin, right? If you take a look at Bitcoin, we'll start there. If we were, really running into it, I would say that it could potentially be bearish. We could see in a monthly EMA 12 and 26 bear cross as well on the EMAs on Bitcoin, which means we could see more downside. And we have a head and shoulders target on Bitcoin. So we had the right shoulder, head, left shoulder, head, right shoulder. And the target, if we take the high to the low there, the neckline, and then go from the neckline down, we're targeting about 12,500. So that's what I'd be potentially looking for. And that also lines up well with our fib levels. I don't have them drawn out here right now at the moment. Oh yeah, I do. Click the wrong ticker. There we go. So head and shoulders and targeting the 0.618, which is there at 13,000 as well. So if we do see that monthly EMA 12 and 26 bear cross, that could happen, right? Maybe the Ethereum merge, we get to sell the news and then we see one more capitulative move down. That's possible. The Ethereum merge could even go bad. And as we know, the crypto sector has been very tied to the tech sector, and tech stocks have been running quite a bit as of late as well. But from the highs there, Bitcoin's now down from the high to the low 75%. But now like I said, we're retracing quite a bit of that move, up 40% off the lows. But yeah, if we take a look at, yes, SPX, that's not the one, SPX, where'd it go? Let's do SPY. And then the S&P 500 down about 25% from the all-time highs, right? But now we've since retraced over 50% of that bounce. So it's anybody's guess, right? All you can do, nobody knows for sure. I do think we're due for a pretty big pullback on the weekly time frame to around 410, 400 even, while we look for a weekly higher low. And if we form that higher low before September, that would be even more bullish because we would get the consolidation out of the way. But if we don't get it in the next couple of weeks, then yeah, I think September could be pretty bearish. And maybe into the end of September, we start to see a rebound in October. But again, if SPY didn't just go through a 25% correction and Bitcoin didn't just go through a 75% correction, I would think that the broader market would be okay, or would be bearish into September and October. I think that would be accurate. But my thesis is we pulled back quite a bit, and we could potentially see weekly consolidation over the next couple of weeks, and September could be bullish, right? We could see massive amounts of euphoria with regards to the Ethereum merge and leading into the elections, right? They may want to prop the market up going into November, right? But maybe we have to wait until October, November. But personally, I think MJ stocks, they could potentially go against the market as well. I think MJ stocks are going to completely leave everything in the dust over the next 3 to 6 months. I think we're going to see a massive move potentially in September. If not September, I think October, November are going to be monstrous for MJ. So hopefully that helps. Seems like I'm the only one asking today. Well, you're putting in the homework, right? It's the people who put in the work and actually, right, want to learn, right? So if you're just going on YouTube and listening to people and buying stuff because someone tells you to buy it, or they think it's a good idea, or you're not buying it because you think it's a good idea, or you don't ever learn how these charts work, or how markets work, or how things are correlated to one another, right? I get people all the time say, oh, I'm interested in MJ stocks. I don't want to hear anything about crypto. I don't want to hear anything about anything else other than the one MJ stock I own. And you're like, well, now you're at a disadvantage, right? You're at a huge disadvantage, right? If you don't know what the S&P 500 is doing, if it's bullish or bearish, right? That's why I say, if you knew nothing about charts, just add an RSI indicator on there. You'll know when we're overbought and we're oversold, and learn what an uptrend is versus a downtrend. So many people are asking, why is MJ down so much when indices are up so much? It's because indices and the broader market is in a monthly and weekly uptrend. Well, it was for the longest time. And now we're entering downtrends, and MJ was in monthly and weekly downtrends for the longest time. And now we're entering weekly and monthly uptrends. So we're opposite, right? And what have I been saying for the longest time, for like at least a year now? MJ is probably not going to enter a new bull market until crypto and tech peaks. And now it's looking like crypto and tech is starting to peak. Might we see MJ start to outperform and run against the grain? I think so. Hi, Rod. May I have your opinion on Shopify or Lightspeed? Which one would you bet on, and when do you see the turnaround in the sector? Yeah, so someone in the, I think Jellybean in the private Power Group community asked about LSPD today. So I should be able to chart that one pretty quickly for you. So LSPD, yeah, monthly bounce getting underway. Yeah, this is another one of those names, right? We haven't really bounced on the monthly. Last time we bounced, we only bounced by like $2. And we could potentially backtest these EMAs here. But we're at the low of the month here. It's hard to say. We're not monthly oversold yet. We already had the monthly EMA 12 and 26 bear cross get out of the way, so that is good to see. But, you know, when this thing starts to bounce here, it's really going to squeeze, in my opinion. We could easily see a 70 to 100% move just to get back up to those monthly EMAs. And like I said, we haven't really bounced in 11 months. So just like we saw with UBX, right? What was it, like 18 months? We had that small bounce there in November. But look what happened when it started its monthly bounce. It broke up 140%, right? So not saying LSPD is going to do the same, but it could, right? Even if it just gets back to EMA 12, that's about a 46% gain. So again, you don't have to get the whole brunt of the move, right? You just need to get a piece of it, especially when we're this beaten down. And if we even go back, if we just take a look at the weekly time frame. So lower highs and lower lows. We have the low, high, higher low, lower high, and lower low. We're still stuck. We need to confirm this weekly uptrend. So if you're looking for an entry on this one, you could wait for a weekly uptrend to confirm. Here we're forming the weekly higher low now. What do we know we need to have a weekly uptrend? We need a low, high, higher low, and a higher high. So you could wait until we confirm weekly uptrends and then enter. Coming off weekly oversold, could potentially be heading to weekly overbought. If we close a weekly candle over EMA 26 there, that white line, that would be the first time as well since all-time highs. So that could be another play, right? Maybe you're a little bit more conservative. Maybe you don't want to catch a falling knife. You want to wait. You want to have the utmost confidence that we're, the bottom's in. And one way to do that would be to say, okay, if we close over that EMA 12 on the weekly at $34.43, you could look to enter then. And then, like I said, if we see a move back up to those EMAs, you're looking at, even just off that entry, you're looking at 25% to 40% of upside just to go back to the monthly EMA, those monthly EMAs, and back test those. So we're back under the 10-week moving average. A lot of names are over their 10-week moving average. We did have a bear cross here of the 50 and the 100 weekly as well. So I'm leaning a little bit less. I'm a little less inclined to recommend this one. I think that we could see a bit more pullback. And like I said, we know SPY and the S&P 500, the broader markets do for weekly consolidation. So if that happens, we could see more downside for LSPD. I think I said, on the stream today to private POW group members, I said, watch $25, maybe start to enter around 25. And sure enough, here we are, we're getting pretty close to that now. And if we, you could even wait till we get to closer to 22, which is our previous weekly support here. So you could try to bottom fish that support while we try to change the weekly trend. So now we're forming this weekly higher low. You could just start to scale in. You could set a stop loss below 22.72. It all depends. Again, I don't know if you hold it, if you have any shares at all. I don't know your average or what your game plan is. If you're looking to hold long term, medium term, short term, all that thing's going to really drastically, the amount of money you're investing in it as well is going to really dictate, kind of change things, right? But what was the other one? Shop. So yeah, Shop. I think we had a PowBot buy algo alert go off on this one. And a case in point, right? We pulled back on Shop in 5 months, we pulled back 83%, right? So everybody thinks MJ's volatile, down 80, 90%. Well, guess what? Shopify, Canada's favorite stock and most valuable stock, I think beat RBC, Royal Bank of Canada, in terms of market cap, I'm pretty sure. And here it is, down 83% in 7 months, right? So it's not just MJ. Everything is risky when it's up, when it gets extended to the upside. And then we get extended to the downside. So I said, watch for the monthly bounce. So again, you could have just said, okay, we break the previous monthly candle, I'll enter, set my stop below the low here. So when we started the monthly bounce, when we broke $40, you could have entered, set your stop under 29, and you could have even made about 12%. Here we are back and within that range though, but you wouldn't have been stopped out yet. So it all depends. Are you looking for a long-term hold? Are you looking for a medium-term hold? We were monthly oversold. So again, as I say, if you don't know anything about charts and you just sell when we're in this territory, right? Just sell when we're here and then buy when we're down here, right? It sounds simple. Oh, I just realized you guys can't see that. Let me, there we go. So yeah, sell when we're up here and then buy when we're down here, right? Sounds simple. Oh, I realize why you can't see it, because your question's in the way. Buy when we're down here and then sell when we're up here, right? Sounds simple, but you get mainstream media trying to convince you to hold everything to to infinity, right? And then down here, oh, everything's going bankrupt and the market's gonna, why do you think the market is super bullish all the time here, mainstream media, and everything's trying to feed you full of hopium and bull blinders, everything like that, right? They're trying to convince you to hold on for eternity, and they're never bearish. They never issue any warning signs. But then when we're down here, they say, oh, stocks are, we're sounding the bell, right? It's because they want you to sell when they're buying, and they want you to buy when they're selling, right? And Jim Cramer's of the world, CNBC, they're all puppets, right? They're all paid by these big financial institutions and Wall Street crooks, JP Morgan, Morgan Stanley, Goldman Sachs. Nothing happens in the world. Why do you think Goldman Sachs just upped, or no, it was Morgan Stanley. I think they just upped their Tilray position by like 220%. Bet you they were selling tech, right? And then they started buying MJ. But yet, that's not what the mainstream media would have you believe. So yeah, you could even enter now with a stop below the low there at 29 cents, right? Yeah, I'd probably pick shop, to be honest. But I wouldn't be looking to hold it for like 5 years or anything like that personally. I'd be looking to get out, maybe somewhere around 75 to $100. See it move back up to there. If you entered now, essentially you could see about 90 to 170% of upside. But then I think we could potentially form a lower high and then see another leg down, because I'm short-term neutral, medium-term bullish, and long-term bearish on the broader market. And if the broader market's going to see a huge move down, that's going to hurt a lot of these individual names. Doesn't mean you can't have some outliers that go against the overall trend, but that's what I would anticipate. So yeah, if you're looking for an entry on this one, if it were me, I would probably look to scale in now and set a stop loss below 29, maybe set a stop loss at $28. So essentially you would risk, if you even just went off today's price, essentially risk 20% to make upwards of 70 to, like I said, if we go back to $100, that's 170%. So 70 to 170%. So those are some good risk to reward opportunities, right? And obviously it's going to depend on how much money you're throwing at this thing. If you're going to put $100,000 into it, well, maybe you want to try and enter closer to support, so you're not risking 20%. Maybe you want to, if you're investing $100,000 into this thing, and you're looking to hold for, up to $75 to $100, maybe you only want to risk 5 or 10% of that. But if you're investing $1,000, well, maybe you're okay with risking 20%, right? And then versus making upwards of 75 to 170%, right? So I'd probably pick shop. Yeah, the MACD and the stochastic blasting off. We're back testing the 10-week moving average. Look, resistance, got above it. Back testing old resistance as new support. This could be the launch pad forming. Pulled back 83% in 7 months. We could still see an moving averages here on the weekly time frame, though. We could see the 50 cross down through the 200. That would be very bearish. That happens on the daily moving average. It's called the death cross. So on the weekly time frame, it's even worse. And then when they cross bullish, it hasn't happened because they haven't been defined since its inception. But this is the first time that we will see any kind of cross on these. So that could be bad. But we just dropped 83%. So I think what could happen is we back test the 200 weekly and look where it is, $73, right? I didn't even know that, right? That's just my experience in knowing that markets don't go down forever and they also don't go up forever, right? So I just know, and psychologically, that's a nice round number, 75, and then 100. Look at that. The 100 weeklies there at 100, right? So I basically, bam, I didn't even know. And that it comes with experience, right? If you do this for 10 years, 12 years, like myself, but for the last 5 years, this has just been my living and breathing in these charts, right? People tell you that they're hocus pocus, they're silly, they don't make any sense, but that's because they didn't put the time in, right? It takes 100,000 hours or 10,000 hours to be an expert at anything. I can guarantee you 99.9% of people don't put in 10,000 hours. because I put in 2 years of thinking I knew what I was doing. And then I realized after like 2 or 3 years, oh my God, I know nothing about charting and technical analysis. And then after like 4 or 5 years, I was like, oh, okay. And now I'm kind of like a moderate. I was terrible. Now I'm like a degenerate, and pretty soon I'll be an expert, right? But it takes 10 years, 5 to 10 years to just studying this day in, day out to really make sense of it. But we did have a death cross. See the 50-day cross downward through the 200-day moving average. So that was the signal. When that price crossed, we were at about $59. So even if you just exited there at the death cross, you'd have been able to reload back around $20. But now we're starting to see the opposite. There are the 50s below. So when the shorter term is above and then crosses down through the longer term, that's bearish. It's called a death cross. Then and a bear cross. But on the daily time frame, they refer to it as a death cross and a golden cross. So then when the shorter term time frames are below the longer term and they curl and they cross up through, that's called a bull cross, a golden cross on the daily time frame moving averages. So with that being said, we could see massive upside if we see those moving averages cross bullish. And if we're getting over the 100 here, I think we could easily see a move back up to that $40 back test, the 200 daily moving average. And then if we can get over that, I think $75 will be in a hurry. And then, like I said, even $100, right? That lines up perfectly with our weekly moving averages. Looking really good, forming a base of support here, looking for a launch pad for the next leg up, in my opinion. So I'd definitely be picking shop. Hopefully that helps. Let me know if that helps. Great question. Lots of great questions. I've learned a lot from you, so I appreciate it. Thank you. I appreciate the feedback. I appreciate the support, and it really makes it all worthwhile, And that was the whole goal of POW Group, right? Was I started, kind of a community on my own, and then people were joining my community, my POW private community. I was just letting people join for free. And then it got to the point where, okay, well, this isn't sustainable. I can't help everybody, right? So and then you started to get like trolls in there, like, Reddit. Like, that's why I'm never on Reddit, barely ever, or Facebook anymore. Pretty much shun Facebook completely. But and then not only do you get trolls, you get a lot of misinformation, and just, it's hard to filter out all the noise. And it's very overwhelming because you get like 2,000 people or 10,000 people or 25,000 people. How do you get a consensus when there's so much coming at you left, right, and center? Whereas we can focus, we can hone in on a certain thing, and we can, we're a group of people that we all want the same thing. We all are working towards a common goal, and that's becoming more intelligent, becoming more sophisticated, becoming a better investor or trader, just learning how markets work and psychology. There's so many moving parts to a market that, it's almost, unless you get lucky, it's almost impossible to succeed right out of the gate. And that was the benefit of POW Group, was A, to filter out all the noise, B, to spot trends before they become cool and before they're trends, right? So that's why I've been shouting from the rooftops about MJ for the last couple of years, is because I'm telling you the next bull market is going to be like generational wealth, right? People get rich in a bull market, right? They might buy something, they might buy shop at, I don't know, maybe they bought it here at $31. Keep in mind, it just did a stock split. And again, that's something to be concerned about as well, right? This is what they did. They did the same thing in Amazon in the .com days. They did 3 stock splits, I think, and then they cratered it, because what a stock split means is there's more shares and the price goes down. So what does that mean? The retail investors who couldn't afford a $1,000 stock, or what was Amazon? They just did a 20 for 1 again. So it was like a $4,000 stock, $5,000 stock. Now it's a $100 stock. Now retail's like, I'm going to buy it. And then they're going to crater it, right? So what I was saying is, people get rich in a bull market. Like, you could have bought here after we just ran, we ran 800%. Even if you bought here, we ran another 480%, right? You can get rich here, but here's where you get wealthy, right? That 100x, right? $1,000 investment into $100,000. And then just like MJ, right? Very similar. Look at the CGC monthly chart, right? Again, here you could have got rich 10x, but look at the multiplier effect from the low to the high. That's 60x. That's where the opportunity is. Look at Cardano, cryptocurrency. I was telling everybody that, what a steal, right? It was under 2 pennies. It was I forgot to share my screen again. It was under 2 pennies, right? You can get rich here, buying here, but it only would have been 30% of upside. Look what would have happened if you bought near the bottom and just held at 0.17 cents. That's 167x. So what does that mean? That means if you put $1,000 in March 2020, in 18 months, you would have $167,000 for every $1,000 invested. So imagine you put 5,000 and you'd be basically a millionaire in 18 months, right? So that's where generational wealth is made, and that's where wealth is made. People can get rich buying here, right? Get these big green dildos and then the big red dildos right after. But this is just a case in point of, you can still make money in a bull market buying late, but this is where champions are made, when you're buying at these astronomically, absurdly low, almost insulting prices, right? So, but glad to hear that. And like I said, I think MJ is going to be the next ADA. It's going to be the next crypto. It's going to be the next Amazon. It's going to be the next Shopify. This is MSOS right here. Look at that chart. Probably the ugliest chart you've ever seen. Right? Am I right? But like I said, MedMen, right? Up from the low of the day today, it was up 42%. From the low to the high, 43%. I'm not here for taco gains. I'm not here for 40%. I'm not here for 50%. I'm not here for even 10x gains. I'm here for 50 to 100x gains. And look at, if you bought MedMen, when I've been buying it under 10 cents, just dollar cost averaging. From the low there at 6.5 cents, if it goes back to all-time high, not even new price discovery. That's 152x. So again, you put $100 into that times 152. You put $1,000 into that times 152, right? How many times do you need to do that? 4 times, 5 times, and you're a millionaire. If MedMen just goes back. So if you put $5,000 into MedMen and it goes back to all-time highs, you're a millionaire. Now, the most you can lose is $5,000, right? So that's what investing is. You have a set amount that you set and you forget. You don't buy and sell because the U.S. says that if you come to Canada, if you're from Canada and you own MJ stocks, you come to the U.S., you might not be able to. Nope, I got to sell my stocks. No, you don't do that. You don't buy into the mainstream media. You don't buy into the FUD, the fear, uncertainty, and the doubt. You don't buy into the FOMO. You set your plan before you enter and you say, okay, I'm going to enter. This is my plan with MedMen. I'm going to enter probably $2,000 or $3,000, maybe $5,000. Right now, I think I've got 2,000 into it, and I'm just buying, periodically. So I'm still not sure what the broader market is going to do. I'm also shorting with SPXS. So if SPY goes down and sees a big leg down and more downside, I'm going to use that profit to buy more names like MedMen and MJ and altcoins, right? That are also going down probably because of the headwinds from the broader market. But I know that the most I can lose is a few $1,000s, and the most I can make is unlimited, right? There's no potential. There's no cap, right? Because what if it goes to double the all-time high, right? What if it goes from 6 cents back up to, say, $10? What if it goes to $20? That's 290x. So 1,000 into $290,000, right? This is what I'm talking about. Pursuit of wealth. This is where wealth is made. I'm not here to get, I don't need any more money realistically. I'm investing my time and my money, my hard-earned money, but I'm not risking any more than I'm willing to lose. I'm not breaking the golden rule. And that money that I'm investing into MJ, I don't care. I don't need it. Like, it can sit for 5-10 years. And then, right now my MJ portfolio is worth about, 10% of my net worth. Well, if we go back to all-time highs, MJ would be worth, like, my net worth would probably be like 60 or 80% worth of MJ, right? Because of the inflated prices. And then once my net worth, a majority is coming from those investments, then I'll look to sell and then rebalance into other things that haven't run, right? Maybe crypto starting to correct 80-90% across the board again, and tech stocks, right? Maybe the S&P 500 does what I think it's going to do on the monthly time frame, and it's going to pull a .com fractal, and it's going to come down here, and we're going to see a 5-wave corrective structure where we do a 1, 2, 3, 4, 5, and we see another potential 3-leg down, right? We could still see 1, 2, 3 more legs, and if that happens, that's down around 200. A lot of people speculating that we could even go as low as below 200 on the S&P 500 in this next bear market, because I think we're in a recession for sure, but I think we're going to be entering a depression, and I think it's going to be I think it's going to be 2 to 3 years of downside in the broader market, right? We're used to 18%. We're used to like 10 to 15% yearly gain on the S&P 500. And in 1 year, we went up 120%. So again, what happens when things get extended to the upside? What happens when all logic and rationale goes out the window and prices just keep skyrocketing? Usually it's a parachute down, right? And Geronimo, right? Like, look out below, because that's, I think, it's inevitable. Could we push up? The market's so manipulated, right? The Fed printing money. We just had the climate bill, health bill get passed. So another, like $750 million going to be printed. So money printer go burr. Doesn't look like it's stopping anytime soon. The market is manipulated. It's inflated. It's artificial. It's not the same as it always was. But what's gonna reach a point? It's gonna hit a breaking point, the boiling point, right? Where eventually it pops and it's not gonna recover. And they're gonna have to probably implement a new financial system. They're talking about all these hacks and cyber attacks, right? OCS, the Ontario MJ store, just got a cyber attack. Their partner screwed up all their deliveries and everything like that. So we're being buttered up for these cyber attacks. What happens if Russia or China or invades Taiwan, or China or Russia attack our financial system, which we know is old and antiquated and vulnerable? Well, that could crash the markets, and then they might roll us over into blockchain. We already know that the SEC, Gary Gensler, says that he wants derivatives and stocks to be settled, because right now it takes 3 days for stocks to settle. So remember in tax loss harvesting, when you had 3 days to sell your stocks, why did they give you 3 days? Why did they tell you 3 days before? It's because it takes 3 days for your stocks to settle. And you guys are all like, well, when I sell it, my money's in my account and what are you talking about, Rod? No, but on the back end, your broker takes 3 days to settle that transaction, right? It's all done behind the scenes. Again, this is what 99% of people don't know, because they don't put in the time. They don't actually want to learn. They just want to be spoon-fed everything, and they want to be rich yesterday, right? But that's not how things work. There's no shortcuts in life. That's why it's called the pursuit of wealth, right? So yeah, back to my point. We could easily see, they might, because blockchain, it settles instantaneously, right? XRP Ledger will settle anything with finality in 3 seconds. So we're going from 3 days settlement, right? And then in the traditional banking system, in the correspondent banking system right now, if you want to send money from here to China through the correspondent banking system, it can take anywhere from a week, right? And the fiat currency difference and change and differential is way more with that versus a cryptocurrency that's super volatile. Yes, but how volatile is it going to be in 3 seconds? It's almost there's not even any concept of volatility, right? If it's done in 3 seconds, who cares, right? Let's just look at ADA here. Okay, 1, 2, 3. Okay, it didn't move. Oh, it moved 0.0001, right? It wouldn't matter. Like, even if the price was cratering, it wouldn't matter. So that's the benefit of blockchain, and that I think inevitably we're going to start seeing stocks trade 24/7. That's a good thing about blockchain as well. We'll be able to trade stocks 24/7, 365. It'll be on the blockchain. It'll be secure, highly secure with cryptography, right? Mathematics, versus right now, everything's done with human. And what do we know about humans? They're greedy, and they do things, and they get corrupt, and there's bad actors in every walk of life, right? So if we can, I'd rather trust math and blockchain than trust JP Morgan, Goldman Sachs, all these companies that don't need any more wealth anyway, that just want us to all stay broke. JP Morgan actually just said the bottom of Bitcoin's in, so it's probably not in. They're probably selling, and they want you to buy. So they told you the bottom's in. Now we're going to go lower, and then they're going to, buy more, and then we're going to go up, right? So they want to buy, so they're telling you the bottom's in, so that you, or they want to sell now because they think there's going to be another leg down. So they want you to buy now at the temporary top, and then they flush it. You get stopped out or capitulate again, say markets aren't for me anymore, and then they buy your tears, right? That's rinse, repeat, every single market. JP Morgan was fined almost $1 billion for spoofing the gold precious metals, so gold and silver, spoofing different orders and things like that. They were fined almost $1 billion. Slap on the wrist, but you know what? They made 3 or 4 billion. Who cares? We made 3-4 billion manipulating and spoofing the market and manipulating the market. But we only have to pay 1 billion, no problem, right? And then they just keep doing what they're doing. And people don't think that other sectors are manipulated, right? Where do you see Hexo and Tilray share price December 31st, 2022, realistically and hypothetically speaking? So Hexo, I think we'll zoom out to the monthly. So realistically, I think we'd see EMA 12. So I think we could see about $1, maybe $1.50 on Hexo. Again, if we see safe banking, couple that with CPG partner or any other bullish news with regards to Hexo or Tilray, it could be, we could go up here to EMA 26. That's why I did a poll saying, what if we went to $3? How much would your Hexo be worth? Tilray, if it went back to EMA 12, that's about a 65% move from current levels, and EMA 12 is sitting at 676. So I think on the low end, $6, close to $7 on Tilray. This is USD as well. Same with Hexo. And then Hexo could be somewhere around $1 USD, I think, by December. But again, if we get safe banking and then other individual MJ company news coupled with, legalization, potential safe banking, I think safe banking has the highest chance ever of getting passed. And I think, again, nothing happens in the world without Goldman Sachs, JP Morgan, and Morgan Stanley. So they said that recently they need to get something done before the midterms for the people, right? They put it back on us and they say, it's for you. It's for you. Okay, Mr. Wall Street crook and Mrs. Wall Street crook, I see your game you're playing. You want safe banking to get passed before a full-blown legalization. Why now? For the people? Might it not be to pack your own bags first before, like JP Morgan won't even let some of its clients own MJ stocks. Okay. So they're manipulating it again, just like they were fined $1 billion for the gold and silver markets. And now they're saying, lobbying the government. They're the ones lobbying the government. Gary Gensler, the head of the SEC, was working for Gold. They call him Goldman Gary, who regulates financial markets and securities, what we're investing in, worked for Goldman Sachs for 18 years. He's a $100 million man, right? So they're going to let they're going to let their financial banks and friends in, right? The Wall Street hedge funds, they're going to let them in first, their friends in first. JP Morgan's not even allowing their clients to buy certain MJ stocks right now. So they get positioned. This is what they did with crypto too. This is what they did with tech stocks. They're going to pass safe banking, in my opinion, at some point, probably in the next 6 to 12 months. They're going to get positioned. And then after that, we'll probably get descheduling. It'll come off the Schedule 1 drug. It'll no longer be in the same category as heroin. Like, how stupid is that? And then we'll see full-blown legal. And then prices will be, like I said, wealth changing, generational wealth and life changing, right? Well, that's when, after safe banking, after the big banks get in, then we see the 50 to 100x gains, right? So realistically, on the low end, I would say we could get, I'd say $1 on Hexo and $7 on Tilray. On the high end, I would say, $2.50 on Hexo, and on Tilray, I would say $10 to $12. But again, we know that the longer the base, the higher in space, right? The greater the accumulation, the greater the expansion. The longer the bear market, the longer the bull market, right? So anything could happen. I know one thing, I'm not going to be selling early. It's just as important to know when to sell as when to buy as well, right? So that's why start to develop a plan. Get a piece of paper out, right? Get a piece of paper out right now. Don't delay, start today, right? Sounds like an infomercial or something, but get this freaking pen to paper and put my plan, long-term, short-term, medium-term, okay? Have a hedging plan. Determine if you want to do a hedging plan, right? Have some cash on the side. But for God's sake, create a plan, because no one has a plan. I have a short-term account and a long-term account. In my short-term account, start with the long-term because it's easy. Not selling until the U.S. legalization hype, right? What do I mean by that? Not when safe banking passes, not when descheduling happens. When the U.S. says full-blown federal legalization, we are now federally legal at the federal level, right? Not at the state level, but at the federal level. That run up that we see is when I'm going to start taking profits on my long-term account. Then I have a shorter-term account where I recently just purchased, a tranche. We'll use Hexo, for example, because it's my biggest one. I bought some at 17 cents. I got 5,500 shares for $1,000 investment into Hexo at 17 cents. And then I bought a bunch at, 25 cents. I bought some at 40, right? I bought a bunch at those levels. So the tranche that I bought at 250 I write it down here. I said, okay, first take profit in my short-term account. And my short-term account's an RSP because in Canada, that's a registered savings account, retirement account. So you get taxed when you take the money out, so you can trade as much as you want, right? That's why it's short-term. In my long-term account, no touch, TFSA, tax-free savings account. You're not supposed to overtrade in a TFSA, right? So I have my long-term, I have my short-term account, and then I set my first take profit level at $2.50 Canadian on Hexo. I don't worry about anything else until price hits that price. And then, you know, if it gets to 230 or 240 or something like that, and then, you know, everything's shooting up and it looks like SPY's gonna, that's why it pays to look at multiple things, you know, not just one MJ stock, look at the whole sector, look at American operators, Canadian operators, retailers, ETFs, see what they're doing, then look at the broader market, see if there's any headwinds there that could be coming. Look at what the talking heads are saying on mainstream media, look at what the political aspect of things are, right? Look at the, you know, geopolitical events that are going on. So there's all those factors. So then my second take profit is $5. Then my third is $7.50. Then my fourth is $10. But in my long-term account, the price could shoot up to $10 and I'm not selling until the US legalizes because that is my game plan. My game plan has been unwavered in my long-term account. I have exited short-term positions in my short-term account. Like when Hexo lost $5, that was a huge red flag. And then I started to reload cheaper. I think I started entering around 450. Granted, it started dropping a lot more. I entered a lot sooner, but at least I was able to reload a little bit cheaper, get my share count up, and I didn't invest any more money than I was willing to lose. I saved a ton of cash, and I was hedging the S&P 500 with a short position. And that money that I made from the short position and the hedge position, I took that and bought more beaten down MJ, right? But most people just went all in, you know, when prices were skyrocketing, you know, back here. When Tilray was going up here, this is where people went all in, right? And then they were left with no dry powder. They didn't have a hedge position, right? So it's all about having a plan. It's just as important to have a selling plan as a buying plan. So if you're going to be buying, set some levels, right? Are you going to dollar cost average? You're going to enter near support and use a stop loss. If you're dollar cost averaging, you're probably not going to use a stop loss. So if you're going to dollar cost averaging, you're going to use that strategy, then set the levels. I'm going to buy here, tier it down, right? And then tier it up whenever you're going up, right? But have a freaking plan. Can't stress that enough. Check ACB. What do you think? Sure, no problem. My pleasure. So ACB has started the monthly bounce. So again, if you knew nothing about charts and you just buy when we're down here and sell when we're up here, monthly overbought, sell, monthly oversold, buy, right? And then here we are starting the monthly bounce, the first time since November. Again, February 2021 highs. We bounced a little bit in November, but realistically since November, it has been 8 months in a row with downside. So a lot of our names are heading back up to EMA 12. So even if you just entered right now and set your stop below the low there at 121, or you could wait, as like I said, S&P 500 could see weekly consolidation soon. So maybe you want to wait, add some ACB around 150, start dollar cost averaging, add 150, 130, 110, under $1, right? Maybe 3 to 5 orders, right? That would be ideal. Or you could just, you know, buy a little bit now, and then you could average up as well, right? If we start to break resistance here at 194, that would mean that we're seeing a higher high and we're getting follow through. And then even if you just, and another way to play it would be to set a stop buy. So again, if the price hits a certain price or higher, your buy order triggers. So if you set a stop buy at the high of last month at 172, if we just go back to EMA 12, like a lot of names, that's 125% move, right? If we go to EMA 26, that's 500%, right? So over 500%, that's a 5X. So it's looking good. The monthly bounce is starting. We're coming off monthly oversold. Personally, I don't own any Aurora. I own an HMMJ, so I assume that there's some weighting in there. But no, I don't own any Aurora personally. I think there's a lot better opportunities. They're focusing more on the medical aspect. I mean, Germany, a lot of states or countries in Europe. I think Switzerland going to be doing medical this summer. If not already. And then, yeah, you know, there's obviously going to be some opportunity, but again, all these companies are drastically different. I did a video on how LPs and MJ companies, I used LPs in Canada, Canadian operators as an example, because they were the most distinguishable. And they've been operating under a legal framework for 4 years. So we kind of know who the winners and losers are now, but we don't really know that in the US, right? We don't really know who the winners and losers are going to be. So for example, ACB is focusing on medical, right? They're kind of pivoting their business to that aspect. And then CGC is more about like brand partnerships. So like the Toronto Blue Jays, they just signed a deal with Alek Manoah. They have Drake signed a deal. They signed a CBD partnership with Martha Stewart. NHL, the National Hockey League, the official hydration drink of BioSteel, right? And then the NHL Players Association, right? So, and then they own stores in Bickle. They also have Tokyo Smokes, or they're into retail and things like that. Whereas Hexo, 100% MJ. All they do is make MJ products, and 100% of their revenue are off MJ. You got Sundial, who's really big into alcohol retail now through Alcana. They made like 75% of their revenue last quarter came from retail alcohol sales, right? People think they're investing in an MJ company, but now they just completely shifted their business model, right? And people don't really factor that in, but it doesn't mean it's a bad or a good investment. It just means that things changed, and you kind of have to make sure your thesis is still the same, but also, don't just own. That's why I think all of these companies have a great place in portfolios, right? ACB for medical, you got CGC for mass awareness and brand partnerships. You got Cron with a ton of cash, could set the stage for a major deal. Also hearing something like patents and things like that they're working on. They got Altria as well. So tobacco, big tobacco. You've got Hexo, who's just 100% into MJ products, who makes great innovative products. 100% of their revenue is only on MJ products. Then you got Sundial into retail and MJ retail selling. But they're also getting into, Zenobus's facility in Malta. So they're into the EU and into Germany, things like that. And they also sell MJ products. And then you got a name like Tilray, who has a distribution business, an MJ business, an alcohol business, and a wellness business, right? So Tilray is only forecasting their sales over the next, few years or whatever. Well, I think only like 5 to 10% of that are going to come from alcohol, whereas Sundial right now, like 70% of their revenue is coming from retail alcohol sales, right? So they're all very, very different. That's why I think they all have places in our portfolio. I wouldn't say it's a bad idea to own them at all. And then, ACB starting its monthly bounce looking really good. In terms of the weekly time frame, we're over the 10-week moving average, and the MACD and the stochastic are starting to get parabolic here as well. And in terms of the weekly moving averages, we have nothing nearby until 416. So again, what do we usually do? We usually trend back towards those moving averages. So you think that we head back up to around that $4 area? There's, I would say, 80% chance we do, right? Nothing's a guarantee. The only guarantee is there's no guarantees, but I would even say it's probably higher than that. And then here we are getting over the 50-day moving average. Next resistance is at the 100 there at 225. So again, these psychological numbers as well, 250, and then 375 essentially is the 200-day moving average. And again, what do we do with these daily moving averages? We gravitate back towards them. We get above, we come back. We get below, we come back. We're super below. Might we come back? That's probably the next thing that's in the cards, right? So yeah, I think it's looking good. What a last minute pounding on Tilray. Didn't see it. Thanks for letting us know what happened there. So we just take a look. What was it? Hourly consolidation? Yeah, hourly downtrend. So high, low, lower high, and lower low. That means zoom out to the daily time frame and look for daily consolidation. Exactly. We lost the low of yesterday. Consolidation just means you're losing the low. So when you lose the hourly uptrend or confirm an hourly downtrend, more often than not, you zoom out to the higher time frame and you expect us to lose the low of the previous candle. So now daily consolidation underway. We're looking for a higher low here compared to 383. That also lines up perfectly with EMA 26. But we're just looking for a higher low. Daily uptrend still intact, and weekly uptrend still intact with the low, high, higher low, and higher high. So we'd just be scouting if we start weekly consolidation. Again, what's this consolidation mean? We're losing the low of the previous candle. This is the weekly time frame. So the weekly candle is at 382 support. So if we lose 382, we look for a higher low. We're probably going to pull back to 350, 320. Look for a higher low compared to 317. Does that mean we absolutely have to do that? No. That's why we look at key support levels. But yeah, starting daily consolidation. SPY probably had a, see, it was SPY. That's why. See, that's why it helps to pay attention to more than just Tilray, right? People get their Tilray blinders on. They only own Tilray. They don't want to know anything about any other MJ stock. And they see this and they're like, oh, that sucks. I wonder why. And then if you look at SPY, there's your why, right? The S&P 500 was down, broader market, headwinds. But if we inverted this chart, right? If it did this and it was going up, then Tilray would probably be doing the same thing, right? We would just expect the opposite, right? It would be tailwinds versus headwinds, right? So it's exactly, that's why I preach. You got to look at, and if you don't want to spend the time, consider joining PAL Group too, right? Because we've got 50 people now in our group, over 50 people, I think it is. And, we got people in there that are days old, weeks old. There's people in there over a year now. And I got, there's tons of people, who you are. They know what weekly uptrends are. They know what uptrends are. They know what downtrends are. They know what, head and shoulders are. They know all these different things. And they can't stress enough how much it has helped them, right? And how much, they'll know the next time we enter a bear market. And to be honest, I'm thankful that I have the group and platform that I have, because a lot of this is overwhelming for me, right? Even after, 12 years of really doing this, I almost became a financial advisor working for Invesco, right? If you look at QQQ, that's Invesco QQQ. I worked for this company, and that was back in 2010, right? So, yeah, almost 13 years. And I was so it's been like 15 years, because I was doing investing before, about 2 years before that. So I've been almost 15 years into the financial markets, and really only started to fully understand what I was doing in the last 3 to 5 years, right? So you need to suck for 5 to 10 years. It's kind of like playing the guitar when you first start learning and you don't take any lessons. I started playing the guitar, electric guitar. I sucked for 3 to 5 years, but I was teaching myself. And then after that, I was amazing, right? But again, it takes 10,000 hours to be good, to become good at anything. And this is one of the hardest things in the world, is the financial markets, right? And you can use other different fundamental aspects as well, but I'm definitely a chartist and a technical analyst. If I want to invest $1,000 today, would SNDL or CGC, what would be the better choice? Well, you could also put 500 into both. That would be the first thing I would say. You don't have to do one or the other. And I would argue that diversification is probably a good thing. And then those are both Canadian companies. So I would also ask, do you own any American companies? I think that Canadian companies are going to see more of a move because of their NASDAQ listing and NYSE on the New York Stock Exchange. A lot of people just can't, if sentiment starts to pick up in MJ again, they're going to go buy the ones that they can buy. If they can't buy the ones on OTC, or if they're from the US and they can't buy in the Canadian Securities Exchange, what are they left with? Tilray, CGC, Hexo, Sundial, right? The poster childs of the MJ space, right? So I would also maybe start building a list for MSOs as well. If you don't, maybe consider some retailers, some ETFs. ETFs will get you, I think there's hundreds of stocks in MSOS in the American companies. So if you're not sure, we haven't really fully saw who the winners and losers are there yet. That's why my biggest MJ holding in the US is MSOS, because I just don't know who the winners and losers are going to be, right? And I feel more comfortable in the NASDAQ listed stocks and the New York Stock Exchange, US major exchanges. So which one would I put it into? Well, I own more CGC than I do Sundial, so that should tell you something. But off the low there on Sundial, it's up 70%, and off of CGC's low, it's up 100%. So, maybe Sundial, but I definitely wait for a pullback. Maybe wait for a pullback. And this is where things start to get. That's where things start to get dicey, right? They run it so much that you're at a loss. You're a deer in the headlights. You're like, I don't know what to do. I don't know if it's going to go up or down. Should I buy? Should I buy higher? Should I wait? What do I do? FOMO, right? And then it could even keep going higher from here. And then people FOMO in, and then we get a really big drop of 20 or 30%, and we come down and test those EMAs and look for that daily high or low, right? This is what happens when things are at 52-week lows, all-time lows, 18-month bear market. It shoots up 100%, 70% out of nowhere, leaves people, on the fence. And then not only are they on the fence, they're sitting there with PTSD saying, oh, is this like last time where we jump 100% and then we give it all back and then we go down another 40% off the previous low, right? They start to mess with you psychologically. But if you just have a game plan, buy near the bottom. You don't need to buy the exact bottom, buy near the bottom. Use the dollar cost averaging, save cash, hedge with the S&P 500 short. But yeah, I'd probably say Sundial just based on that alone. And Sundial starting daily consolidation already. as well. So that increases the odds that CGC is going to do it as well, right? So the more names starting daily consolidation, what is Tilray doing? Losing the low. So we're starting to see two major leaders in the space. Might that mean CGC is going to see daily consolidation? Probably, right? So yeah, I'd probably say sundial, but yeah, you don't have to just buy one or the other either, right? You could buy 750 of one, 250 of the other, 500 of each, 600 of one, 400 of the other, right? Just like when you're unsure about a trade, if you should sell, if you got $1,000 into a stock, if you're not sure if you should sell some, or maybe whatever the price, whatever the amount you have into it, if you're wondering if you should sell, you're probably heavy as it is, and you're a little worried, right? Maybe you're not sleeping well. So the rule of thumb is you can sell half or 40% of it, right? And then that way you're right either way. If it keeps going up, you're right. If it keeps going down, if it goes down, then you have that money enabled to reload cheaper. That's kind of the idea behind a hedge position with the S&P 500. And that's why I said the S&P MJ wasn't set up well at all. If SPY dropped 10, 20%, and then SPY dropped 25%, Netflix dropped like 80%, Shop dropped like 83% in 6-7 months. So exactly what I said happened. We could see MJ see really extended to the downside because we weren't set up at all when we were in monthly and weekly downtrends, when SPY started confirming weekly and monthly downtrends. So that's very bearish. That's tons of headwinds, right? And yeah, and then we saw that down. So if you would have had that short position, you could have used the profits on the SPY trade to buy more beaten down MJ, because when SPY was going down, your SPY short was going up. And then MJ, while your SPY short was going up, MJ was still going down with SPY. So then you were able to take those profits and buy more beaten down, cheaper prices worth of MJ versus just going all in. That's another thing too, right? Maybe you don't put $1,000 in today. Maybe you put $250 in each and then save $250 each to buy a little bit lower, right? Set some buy orders in case it goes to that when you're not on the computer, right? That's another thing too. Are you on the computer a lot? Are you on the computer once a week, twice a week, 3 times a week, at least once a day, right? Like, are you on it all day, right? That's all going to change too. So consider setting a limit buy order and sharpen your skills, right? Now's the time to start sharpening your skills. Bear markets are for building, right? Why do you think I've been doing other things like Airbnb, starting my Airbnb? I just had another booking, I'm having really good traction with that. And I'm just building in a bear market. I'm finding other ways. I'm looking at the Edmonton market that, is probably due for a rebound in the condo market, right? So I'm looking at things. That's what Power Group was all about. Pursuit of Wealth was identifying trends before they happen, right? You don't want to buy MJ stocks when all your friends are saying, hey, buy this, because it's probably too late, or you're probably going to see a little bit more upside and then a huge waterfall down, and you're going to get wrecked again, right? So let me know if that helps. Hopefully that helps. Do you have any insight on why Tilray is swinging so hard between 4 and 4.5, 450, in some cases 10% in the last 3 days in a row? Yeah, it's exactly what I said earlier. So volatility is starting to pick back up in the space. You're starting to get day traders, swing traders get into the space, right? So you have shorters. Essentially, it's just a game of tug of war between short sellers and longs. But all it's going to take is something like safe banking or any kind of news with regards to an individual MJ company to really squeeze out those shorts. But in my opinion, we need to see the whole sector reverse. And I even did a video. Just go over here to videos. Like literally pretty much every question that I have now, I have a video for. So it's pretty awesome. So just search volatility. And that's literally what you're saying is, why is it so volatile? And I already did a video 6 days ago saying volatility is back. So you had a 6-day heads up that we were going to be volatile, right? And what did I say in the last couple of days? I said, you're going to start to see MJ out of nowhere, like on Monday this week, right? Or it was last week too, wasn't it? It was the 8th. Yeah, the 8th. So that Monday, we were up out of nowhere 20%, right? And then the next day we're down 10%, because short sellers are coming in, day traders, things like that, right? And then the next day we're up 18%. So that's what I said. When we're this beaten down, when we're getting close to a bear market bottom and entering a new bull market, this is where you start to see 20% gains, followed by 10% pullbacks, followed by 10, 15% pump, and then another 5, 10% pullback, and then a 20% pump. So let's just look. We pumped 20, right? I already did this earlier in the stream, but then we dropped 10. Then we pumped 18. Then we dropped 10. Then we pumped 3. The next day we pumped 21%. Then the next day from the low of the day, 11%. Then the next day, another 16%, right? But if you just go from like the high of the previous day, right, from like here, from the high of that day to the next high, we went 20%. Then from this high to this high, it was another 7%. Then from this high to this high, another 22%. Before you know it, you're up almost 50% in a few days. People are scrambling. They don't, it's summertime. I went camping for a week and I come back and shit, I missed the move, right? So this is what they do, right? This is the whole game's rigged. It's like, it's worse than a casino. Like you go play blackjack, you have a better odd, especially if you don't know what you're doing, right? That's why if you don't know what you're doing in stocks and financial markets, like you get wrecked real easy. You probably have a better chance of winning blackjack, right? Because it's the odds are so stacked against the retail investor, especially the new one, right? If you haven't, like I said, I've been doing this for 15 years, and only as of like the last 3 to 5 years have I really thought that I've like really know what I'm talking about, right? So if you've been doing this for any less than 10 years, there's a good chance you're at like a 90% disadvantage, and you're also going against bots and algos now. And every single day, technology gets more sophisticated, more advanced, more intelligent, artificial intelligence, right? And not only that, the volume increases. The more bots, the more algos start to hit the market, means more difficult for you and I, right? So that's why you just got to keep the basics. Go back to the fundamentals, the 101s, right? Keep it simple. Don't buy into FOMO and hype. Buy when again, that's why I say, know what uptrends are, know what down, these 3 things, your homework. You can go to my palgroup.ca website, pursuitofwealthgroup.com. It'll tell you, I go over, it's a free course. There's 3 modules, 30 lessons, free course, doesn't cost you anything. And you'll learn what uptrends are, downtrends. And then I would say the next thing you need to put on your chart is a RSI, relative strength index. It'll tell you. And then just as an average, don't use the monthly because sometimes we don't see the accurate because it doesn't get as extended. Use the weekly. Use the weekly RSI. Learn what weekly uptrends are, weekly downtrends, and weekly RSI. If you use nothing other than that, you'll have about a 50% advantage over your average retailer. Not to say that you're not going to have issues and errors and mistakes, because you will, but man, you'll be so much more ahead of the pack if you just learn what weekly uptrends are, weekly downtrends are, and use the weekly RSI. Anytime you see that this is here, get worried, right? If you're holding, that's when you should think about selling, right? And when everybody and their dog is screaming on socials and everything that, oh, this is a great investment, that's probably because the RSI is overbought, right? Because people are buying, right? So anytime we're up here, feel nervous. If you're holding long, look to sell. And then anytime we're down here, get greedy, right? Greedy when others are fearful, and fearful when others are greedy, right? So again, sell. And then down here, you want to buy, right? So look what happened here. If you just bought here when we were oversold and just waited, that would have been 13x, $1,000 into $13,000. Okay, we're overbought. I'm going to sell. And then we drop from there. We drop 63%. Okay, we're getting close to oversold. You might have said, oh, we're not oversold yet. I don't want to enter. And you're like, damn, I could have had another 10x, right? Yes, that's true. But what if you just would have waited for another little while? Oh, look, we got weekly oversold again. Okay, how much did you make there? 5x. Okay, 1,000 into $5,000. Cool. Then we hit weekly overbought again. Okay, I'm going to sell. Then we drop 96%. And now you start to buy again, right? And just wait. Turn the mainstream media off, right? As long as you're buying good companies, don't just buy anything when it's weekly oversold and it's like a penny stock, right? But, like a CGC or a Tilray, you can't go wrong, in my opinion. Anything can happen, but man, as close to 100% sure, right? So hopefully that helps. Why would you sell when they legalize? Don't you see Tilray and Hexo growing after that? You don't see Tilray going to $200. Yeah, so I would sell and then look to rebuy cheaper. So yeah, good question. But look what CGC did on the run up to Canadian legalization. So again, when we start to get weekly and monthly overbought, leading into U.S. legalization hype, when we get extended to look at the RSI, anything over 70 is considered overbought. We were at 92, right? And that was leading into the the Canadian legalization. So it's not that we wouldn't go up in the future. It just means you're going to get a chance to reload way cheaper, right? And if you would have just exited there on that run up in my long-term account, you would have been able to reload 96% cheaper. Whereas if you held, now you're down 98% and you just gave back all those gains, right? So not my strategy is not, and that's why I have a short-term account as well, right? Because I take profits. And then in my longer-term account, okay, if Tilray goes back to $100 and I don't sell in my long-term account and the US doesn't legalize and I don't sell, and then Tilray goes back to $5, I'm like, okay, I don't care because I have it in a short-term account and I already took profit at these different levels, right? And then probably whenever US legalizes, Tilray goes to $200 and then I'm fine either way, right? But case in point, into Canadian legalization, if you just exited there, you would have had a way, way cheaper price to reload, right? So that's the idea. And I'm not gonna sell my MJ in my long-term account to never buy MJ long-term again. I'm gonna sell it, look to reload cheaper, and once it becomes a significant part of my net worth, then I'm gonna rebalance it. I won't go back in with the same amount of money that I took out, right? So if my long-term account, if I invested $50,000 and my long-term account now worth $500,000 and I exit on US legalization, I'm not gonna put that $500,000 back in. I'm only going to put in another $50,000 or $100,000 maybe, right at the most, and then I'll look to put that other 400,000 or 450,000 into other names that haven't run yet, like maybe real estate that starts to tank, or tech stocks that start to tank, or maybe the S&P 500, something a little less risky. Because if you're at $500,000 or something like that, maybe you don't want to take on a super amount of risk, right? But everybody's situation is different, right? I'm only 32. Some of you might only be 18. Your horizon is way different. Some of you might be 50 or 60, right? My demographic, if I go to my analytics on my channel, it's my target audience is 25 to 35, but it goes all the way up to like 70, right? There's 70-year-olds watching my videos. So their time horizon would be drastically different, but there's no right or wrong way. You just have to have a plan. That's the most important part, is that you develop a plan. But hopefully me sharing my plan with you helps you. Let me know if that isn't clear, or if you want me to expand. I'm confused. I might just end up buying both at some point. Yeah, that's what I would probably do. I own both, but I own more CGC than I do Sundial. Yes, it helps. Thank you, sir. Okay, perfect. I have Hexo and I'm thinking adding more before it goes higher and hold. Yep, not a bad idea. Starting the monthly bounce. First time since $7. So I think we could easily see a move up, back to around $1, a couple dollars in the next 3 to 6 months. Indeed. Awesome. Cool. All right. It's been fun as always. Going to end it there. Thanks again for joining us on the Pursuit of Wealth, and take the bell, share the video with anybody that might find value. I know it went a little bit longer today, but it is what it is. I don't mind, as long as people are getting value. I don't mind coming in here, and spending my evenings doing these live streams after I just, spent the whole day, working in the Power Group private community. I don't mind coming on here because, like I said, people are saying they're getting value and, learning a lot and things like that. So just like Jamlosi says here, I've learned a lot from you, so I appreciate it. I appreciate you. I appreciate everybody that joined the stream today. Thanks again. I appreciate it. Thanks for joining us again on the Pursuit of Wealth, and we'll see you on the next video.